Hey guys, it's Nick, and last year in late November, I did this video about arguing that it was time to buy oil stocks, and oil stocks are up a good amount since then. However, they've had a pullback. So this video is going to look at what's going on in the oil market, why oil is down recently, and the potential reasons why it can stay down or why it can bounce back significantly from here. So I'm going to look at both sides, kind of thinking out loud of why I should buy oil stocks, really. So part of the reason for the oil price drop recently is probably the old buy the rumor, sell the news kind of thing. People have been anticipating this OPEC Plus deal that they've been supposedly arguing about with United Arab Emirates. Just a quick summary of what was going on with the OPEC Plus deal. OPEC Plus is OPEC, and the plus is the non-OPEC members that still cooperate. So these 13 countries are OPEC, and these 10 countries are the OPEC Plus who still cooperate in fixing global crude oil prices. So OPEC Plus last year cut production by 10 million barrels. So the big disagreement was with the UAE. They are producing 3.168 million barrels a day, and they wanted to increase it a lot higher. And so they agreed to raise it up to 3.5 million barrels per day. And this is the new level from which their cuts will be calculated from. The problem with that is if OPEC allows them to raise their production, then everybody else wants to raise their production as well. So even Saudi Arabia and Russia will see their baselines rise to 11.5 million barrels per day from 11 million, and even Iraq and Kuwait will see their baselines rise by 150,000 barrels per day each. So this OPEC deal could have a dampening price on the price of oil because they agreed to increase production. So they went from a reduction of 10 million barrels a day to only 5.8 million barrels a day, and they will gradually increase production until the end of 2022 to leave them some room to maneuver in case a global recovery stalls due to new virus variants. And so if sanctions on Iran are lifted, they could also add 1.5 million barrels per day. But a lot of people are already saying that they're probably already trading a lot under the radar with China, sanctions or no sanctions. So how much more are they going to bring? Not sure. So OPEC increasing production definitely could be a driver of some of the reduction in the crude oil price, but probably the bigger one is all this talk about this Delta case spike going out all over the world, and some countries going back down into lockdowns or mandatory masks or that kind of thing. And so this seems to be the bigger thing that people are worried about in the price of oil. So I think the worry about the Delta case spike is overblown, and this guy from JP Morgan is saying the same thing here. And interestingly enough, and this chart from Goldman Sachs is very interesting because it shows the peak hospitalization cases and fatalities in the UK. And you see here, although the new cases are rising up to 40% of the peak before in the UK, the hospitalizations and the fatalities are way under not even 10% of the peak. So they may have a lot more cases, but typically variants are less deadly than the original, and you're seeing that being borne out here. So I think this whole hype about this is way overblown, and this could be a good opportunity to scoop up oil stocks while people are throwing them out and selling them down on the fears of a new shutdown. So what is a positive for the price of oil and oil stocks? Well, it's all this ESG activism against oil companies. So this ESG, environmental, social, and corporate governance, is pushing money managers and all these other investment companies like mutual funds, pensions, and IRAs to divest from oil-related companies. And here it says, without a significant substitute for oil, divestment is an obvious problem because the world's oil fields decline naturally 6 to 8% annually, making incremental investment in new supply mandatory, even if demand stays flat or declines. So today's push against oil could thus be sowing the seeds for the next recession by facilitating a huge spike in prices. And so Bank of America is forecasting $100 oil in 2022, and some experts believe the lack of investment, we could see the price eventually pushed to $200. Now, oil is not going away, and the world uses 100 million barrels a day, and no amount of solar panels or anything like that is going to change anything like that anytime soon. So even if we are divesting and all of that stuff, that just leaves more money on the table for OPEC and Russia and China. So they're all saying, yeah, go ahead, guys, divest, do your ESG. We'll be over here still supplying the 100 million barrels a day and making all the money while you guys stop producing oil and make the price really spike up a lot. And so this Forbes article talks about oil and natural gas supply 70% of the energy used in the U.S. And so compared to 2019, global oil demand in 2020 fell 8% to 92 million barrels from about 101 million barrels. But Goldman Sachs says global demand should average 97 to 98 million barrels a day by August. It could actually go to about back to 100 million barrels a day, Goldman Sachs is projecting. And one thing the ESG and electric vehicle evangelists don't really tell you is that passenger vehicles account for 7 to 8% of all emissions. So they're obsessing about that, but there are much bigger things causing more pollution. And in December, an Essential International Energy Forum report with Boston Consulting Group found E&P CapEx, meaning exploration and production, capital expenditures for oil and gas fell 34% in 2020, with another 20% decline expected this year. And even the French oil giant Total has warned about a looming catastrophe, saying that the world could face a 10 million barrel per day shortfall of oil supply as soon as 2025. Just like they say the cure for high prices is high prices, they also say the cure for low oil prices is low prices. And so with low prices, a lot of shale producers can't produce. Add to that the pressure from the ESG people to reduce production of oil in the West, at least. And this could be a significant boost for the price of oil in the not too near future. And here the ex-chair of the world's biggest pension fund is saying, beware of the ESG bubble. Yes, it's almost like it's become a religion. Another positive for the price of oil is inflation, even though the Fed says it's temporary. Let's take a look at what Campbell's Soup is saying. So Campbell's tomato soup has been around such a long time, and the stability of their packaging means Campbell's Soup cannot hide the price increases. And so it's passed along to customers. So let's look at a chart. This is the price of Campbell tomato soup over the years, and just looking from 2020 to 2021, it looks like about a 10% increase. So even though the positives for oil seem to outweigh the negatives, oil has had a good run recently and looked like it was due for a pullback. Plus, in the last month or so, every story about oil was very positive, and so usually when you see that, it's probably time to take some money off the table or do the opposite. Here's an article saying, here comes $100 oil prices, Bank of America, June 21st. June 16, Kramer saying, add to your energy holdings, Chevron, Exxon, a month ago, which now they're all down, I don't know, 10, 15, 20%. June 15, Barron saying Exxon could rise 40% with big dividend growth. Yeah, but not before they fall about 15% off its high. And the real nail in the coffin for the price of oil is Goldman Sachs coming out on July 6th saying 10 great stocks to own because oil prices have surged, by Goldman Sachs. Now, for anybody that think that Goldman Sachs is a nonprofit organization that hires people at high prices to put out great research reports so the people who read them on Yahoo Finance for free can get rich, you got another thing coming. And so looking at these 10 oil stocks that he's bullish on, just at the beginning of July, they are all now down 10% or more. So it may be a good time to actually look to start buying some of these, I would say. And looking at a long-term monthly chart of XLE, the energy sector ETF, you can see that the last month has been really bad, but these last 4 or 5 months, oil has been kind of trying to go up and getting smacked down off the 50-month exponential moving average here. And so after it couldn't blow through there, it's now, decidedly taking a turn down. So even though I like oil going forward, I would like to see the price come down to maybe the low 40s or something before I start scaling in, hopefully, or to see the stochastic kind of bottom out, at least maybe down to the 45 or 30 level. That may happen, that may not happen. Oil may bounce back up quickly before any of this happens. So you have to decide how much you want to put in, if you want to put in anything. And this is not a recommendation for anybody to buy or sell oil. This is just what I'm thinking out loud. Looking at this chart, I expect it to go lower. But looking at the fundamentals, I think they're good. But it seems that the chart usually wins out and reflects what the real fundamentals are anyway. Now, on a weekly chart of the XLE, the stochastic has almost bottomed out here, and it's bouncing off the 50-week moving average, exponential moving average here. So there could be a bounce here. And looking at the daily chart, it looks even better because the stochastic has already bottomed out. The MACD has bottomed way below here. And it really looks like you could get a bounce easily up to 50, 51 or something like that. So it depends what you want to do. If you're in it for the long term, maybe set your scales in and just place your orders to buy more and more if it goes lower. If you're just looking for a quick bounce, maybe now's the time to get in and get a quick 5% off of XLE or ExxonMobil or Chevron or something like that. So that's my thoughts on what's going on in oil. And I always like to point out to people who think that these investment banks are out there to make them money for free. Take a look back in 2008 when oil was about $140, which was the absolute top. Goldman came out and said that a super spike could lift oil to $200. This was May 6, 2008. Forward a few months later to December 12, 2008. So 7 months later, Goldman, once warning of $200 oil, sees $45 in 2009. So don't believe everything you read from these investment banks. Usually they're putting these things out there to take the opposite side of the trade on you. So guys, if you like this video, hit the thumbs up and leave a comment and let me know if you think this is the bottom for oil or it's going to take another leg lower. Thanks for watching, guys, and I'll see you in the next one.